Market conditions majority bullish. S&P futures up 0.22 as of this moment. We're seeing majority bullish on the daily time frame at 14 and 0, also 14 and 0 on the weekly time frame. We're definitely getting an expansion of trend, and that just still continues to move to the upside. Haven't had a test or retest at all of the breakout zone, that 6200 range, even all the way down to the 236 location. That entire zone becomes our momentum zone, so we could retrace all the way back to the top end of that green demand block into the 236 and still have that be bullish demand, still have it be an overall uptrend. So but that that could happen pretty quickly. These are, when we start to feel like this, where we're just getting this slow consolidation, really not aggressive demand, really no supply, there's no selling happening right here, starts to make me a little bit nervous, because we do start to get what's going to be the thing that triggers the market at these levels. So it's about risk management. When we start to get expanded in trend, we don't want to be aggressively jumping in. We want to make sure that we're being prudent on position size. We want to make sure that we're being prudent on stop loss management, as well as taking profits and targets and managing stop losses. Okay, so the value of this chart is to look to see which direction are we at in the trend and where are we at in the trend. Are we compressed or are we expanded? Obviously, you can see that we're expanded. We can use some of kind of the historical use of this indicator to look to see, are we compressed or are we expanded? Well, what happens when we're expanded to this degree? Well, that's just unsustainable. Could it be sustainable here as we're kind of going through earnings season and get some catalyst to potentially push it higher? Yes, that could be the case. Let's jump over and take a look at the rest. S&P 500 obviously closing out at 14 and 0. We did see some weakness on the breadth yesterday. Number of stocks in the S&P above the 50-day moving average, trading back to 66%. So hovering back down, starting to shift back to some bearish trend. Still majority bullish here, but getting some compression on the participation in this rally. Okay, so that's one of the things I mentioned in another update, is that we are we're towards the upper end of the range. What's going to be? Are we seeing some internal selling starting to happen as things kind of coast to the upside? Is there some internal weakness starting to happen? And that's one of the values of using this indicator, is we're just seeing a little bit of internal weakness. VIX, we're not seeing much fear yet. We're seeing that drop down below that 15 number, 1482. And so we'll see if we get any kind of confirmation move higher, if that does push breadth back to the upside or not. Dow Jones Industrial Average, we're seeing a potential breakout here, is yet to give us those all-time highs like the other indices, but 448. It's getting close to that breakout. Some tight consolidation right here. That is also at the upper end of this trend. It can get significantly wider here. You can see kind of the length and the width of this expansion versus where we're at here, but we are expanded relative to where we've been, and certainly to be aware of that on the Dow. Triple Q is continuing its overall uptrend, gapping higher here to 570. Same story on that. We know where we're at in the trend. We've had a big run. Is it sustainable? Do we need a retracement first? It's about risk management at these levels, not adding in aggressively, just watching to see how how things are positioned. The these are your Russell 2000, your small cap names, to continue to see bullish expansion here as well, pressing up towards this supply location. Supply locations are where there has been selling before, or where selling began. Okay, so if we're on this upper range and selling began here, and now we're visiting that area again, that becomes area where there may be some additional supply, some additional locations of selling, and we just have not pushed up to that level like we have seen in the other indices. USO, let's take a look, see what happened yesterday. A little bit of a volatility right here. Let me pull into this trend. This is the one I want to grab, is here and here, and we're pushing back up. So some action happening here in oil, majority bullish. See if it can push up above momentum, above that 78 range, and we could see some continuation here in oil as well. GLD, which is gold, getting a little bit of a weak pattern here as well. We've talked about this obviously, and it's just this consolidation range. Upper end of the trend is really compressing, still majority bullish, still in momentum, but really extended extended in this weekly time frame. Actually getting a little shift back here on the weekly time frame in gold from 14 back to 13 and softening at the upper end of that trend. It could pull back to that 278 range again and still be in an overall uptrend for gold. That may bring some additional demand back in if it did start to pull back or down into some of these corrective zones as well. Dollar should be strengthening, and it is. We're seeing that move higher. So a strengthening dollar, typically you're going to see that inverse relationship between gold and the dollar. SLV continuing its overall uptrend, getting a little bit of a pullback here as well. When we get those really far extensions, just like in an individual stock that we're looking at, we're getting, it could pull back. This becomes our volatility zone or our playground zone where these are allowable volatility ranges inside of an uptrend. When we start to break down under that 236, then it becomes a little bit more corrective, can take a little bit more time, don't quite have as much demand pushing that current trend. It has to reestablish and become an overall new trend again, which is yet to happen, but a pullback should be okay for most of these these metal runs. Some retracement, some consolidation at these levels. 2 year we're seeing at 390, still holding that. That overall pattern hasn't moved much in the last couple of days. 10 year is sitting right at 438. And again, we've talked about that. Just tight consolidation around that 4.5 range for a couple of years now on the 10 year. A couple stocks to consider today. You've got MEC, which has a nice confirmation bar, increased volume, back into momentum, and also looking at GEOS, which is obviously a little bit more aggressive play here, but you've got $6 to 18 all within one trend. Really deep retracement, finding demand back here at 618 and then pushing back up. Big confirmation bar. Didn't quite close into momentum and getting some selling in this upper supply location also, but maybe one to consider here as well. That is GEOS. That'll do it for today's update. Everyone have a fantastic day today.